Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 6th, 2025, and we're diving into Warner Bros. Discovery's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Warner Bros. Discovery has released their Q3 2025 results, and there's a lot to unpack, from revenue shifts to strategic initiatives in their streaming and studio segments.
Revenue and profitability overview. Let's start with the top line. Warner Bros. Discovery reported total revenues of $9.0 billion, a 6% decrease from the previous year. Despite this, they managed to achieve an adjusted EBITDA of $2.5 billion. John, can you elaborate on these figures?
Absolutely. The revenue decline is primarily due to decreases in distribution and advertising revenues. However, the company has managed to maintain a stable adjusted EBITDA, which increased by 2% year over year, thanks to growth in their streaming and studios segments. Additionally, their free cash flow improved to $701 million, indicating strong cash management despite the revenue drop.
Streaming and studios performance. Warner Bros. Discovery's streaming and studio segments have shown notable performance. Streaming revenue remained flat at $2.6 billion, while studios revenue saw a significant increase. What are the key drivers here, John?
The streaming segment maintained its revenue despite challenges, with global streaming subscribers reaching 128 million. This growth is driven by international expansion and new content offerings. On the studios side, revenue increased by 24%, largely due to successful theatrical releases like Superman and The Conjuring: Last Rites. The studios segment's adjusted EBITDA also saw a substantial rise, reflecting strong operational performance.
Global linear networks and financial health. Moving on to the global linear networks, revenues decreased significantly. How is Warner Bros. Discovery managing its financial health amidst these challenges?
The global linear network segment faced a 22% revenue decline, impacted by lower domestic pay TV subscribers and the absence of Olympic revenues. Despite this, the company has been proactive in managing its debt, repaying $1.2 billion this quarter. They ended the quarter with $4.3 billion in cash and a net leverage ratio of 3.3x, indicating a solid financial position to navigate future challenges.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 4 cents, but Warner Bros. Discovery reported an actual EPS 6 cents. What does this mean for the company and its investors?
This EPS miss indicates that the company faced more significant challenges than anticipated, particularly in managing costs and revenue streams. While the adjusted EBITDA was stable, the net loss and EPS miss highlight areas where the company needs to focus on improving efficiency and profitability. Investors might be concerned, but the company's strategic initiatives in streaming and content could offer long-term growth potential.
Operational efficiencies and future outlook. Looking ahead, what are Warner Bros. Discovery's strategic priorities, and how do they plan to enhance operational efficiencies?
The company is focusing on expanding its streaming services and optimizing content production to drive future growth. They've achieved a 30% reduction in costs for the global linear network segment, which is a positive step towards improving margins. Additionally, their proactive debt management and cash flow improvements position them well to invest in strategic initiatives and capitalize on the growing demand for streaming content.
Key takeaways. In summary, Warner Bros. Discovery's Q3 2025 results show a mixed performance with challenges in revenue and EPS, but strong strategic initiatives in streaming and content. Thank you for joining us, John, and thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Warner Bros. Discovery's performance in the comments below.
Thank you for having me. It's been a pleasure discussing Warner Bros. Discovery's financials and future prospects.